Welcome to the video. Long story short, still bullish on the stock, still love PayPal, not currently adding to my position, happy with my weighting. Other than that, we're going to talk about the daily and weekly price action, when I'm going to add, when I'm going to trim, the short and long dated options interest, and any PayPal news. Basically, we're just trying to identify the key levels where we want to add, where we want to trim, where we think price is moving to, and what the company's worth. These will give us a very clear picture of our plan and our strategy. Other than that, though, there's my portfolio update there, 22.67% for the year. Love it. Hopefully we can do much better than that by year end, but let's get rolling. Back to it. I know I missed a couple of days last week, but for good reason. I have a whole new setup, new room, snakes at the back, laptop. Hopefully it doesn't lag, and hopefully the audio is going to be a little bit clearer as well. I'm still moving stuff around, so I'm getting used to sitting in the middle of this camera, which is a bit weird because it captures so much image, but I'm sure I'll get used to it after a while. Anyway, enough to do. Let's look straight at the chart. PayPal. I know this one's been, PayPal again. This Head and Shoulders really looked like it wanted to break out twice. We've had two false breakouts here. So we had a breakout here, a pullback, and a bounce. That easily could have gone higher, but, the market's decided to poo-poo it. And then we've done it again, pop. And I even added on this one. I thought this one's going to hold from a technical perspective. This one looks fantastic. We're getting another go at it. However, I probably should have moved the resistance line at the point of failure, which would have been more like that. That's the new area of interest. Does that make sense? So really, that was just me doing a little bit of sloppy TA and getting a bit excited. But luckily, it was a small ad. And I think overall, PayPal at this level is super low risk. It's not going to go to zero. That's crazy. It makes far too much cash for that. So it's a good low risk position, and it does give my portfolio some stability since I'm chopping around, especially with crypto popping at the minute. So it helps me lower some risk there. Other than that, though, on the chart, we've got this really nice channel here. It's just kind of chopping. This probably would be quite fun to trade, though I don't think the range is particularly exciting. 6%, is that worth trading unless you're going to go in there with leverage? Probably not. This big red candle here was the was it JP Morgan? No, it wasn't JP Morgan. It was, I don't know. So some bank said they were going to change charges or something in like 2 years' time, but we'll talk about that in the news section. Other than that, though, we really are kind of trapped between this massive volume shelf and this massive volume shelf. Again, we saw historically when we got over that, that's when price starts to move quite a lot. Now, fundamentally, PayPal's got to do something here to stimulate things. The stablecoin really hasn't done as much as a lot of people were hoping, so that's been a bit more of a laggard. The ads business still isn't rolling very well. We're seeing a lot of foundational changes, but the time it's taken for them to execute on this is more than a lot of investors have been willing to give it. I'm probably going to give it to 2026, and then if we don't see a good change in money hitting the bottom line, then I'm probably going to divest of the position because I've honestly given it enough time now, and ideally a turnaround shouldn't take 5 years. But it is a large company, but that makes me think things are way worse under the hood than we were aware of. What else on the chart? So bull market support band giving us a good support here. So here's a really good level if we do want to go to the upside. It's above my average, so I've not made a loss on that yet. I've just lost opportunity cost elsewhere in the market. But that I'm okay with that because my portfolio has been growing pretty well independently of this position, which is sub 10% right now. My kind of short range term was we do break this pattern is $90, but again, I'm still working with a fair value of $124, so we're miles away from that. The upside potential far better than the downside risk. Indicators, RSI neutral, MACDX plus. We did tick overbought when we had that breakout, which again would have been an indicator for a little bit of caution. We did, as I think, because PayPal's getting a little bit boring even to me now. I'm just not interested in trading it and over trading it with these levels. This golden bar indicates here, though, the 4 golden bars. That was a great place to buy if you bought there. Normally, I probably should have bought more there instead of waiting for the breakout, to be honest. But, live and learn. You'd be up 20% in 61 trading days, which is nothing to sniff at, really. But I do have a fairly large weighting in this company, and I didn't want to add more at that time. This bearish divergence has cleared out. Hopefully, we can break through that on the next push-up. The market is going to get super crazy into year end, especially if we start getting cuts. So something to be aware of. I think the broad market might chop around and kind of just be flat for a little while until crypto's done its thing, and then there's going to be a wash of money floating around the system. So watch out for that. Let's look at the weekly. And it doesn't appear that my laptop is lagging when I'm changing things around like it was before. So maybe the new laptop did the trick, which we absolutely love. Again, big ass cup and handle. That is beautiful. If we get to that $90 and the fundamentals start to line up, we could easily get way to my fair value. So very excited about that. Downside risk on this one, I don't think we're going to get past these lows at 57. I would actually quite like to buy more at those levels. I'm a bit annoyed that I didn't buy more down here, but live and learn. I've only got so much money and I'm pretty much all in the market at this point. I'm ready. I'm ready for what's coming, be it what it may. Weekly indicator, RSI, neutral, MACD plus, just sort of tootling along as well. Nothing too exciting, and flow is kind of flat. So overall, the chart, we've got a good range pattern. We need a breakout. We need something to push us over. Maybe this earnings. Earnings is July 29th. Quite soon, I think. Less than 10 days. Less than 10 days. So that would be super amazing if they could, get people excited. I want to see some numbers. I want to see some good stuff hitting the bottom line. Just keep saying 2026, 27 is not going to cut it now with investors. They're all getting a little bit fed up. So it needs to be a hit. And fingers crossed. All right. So options market on this one. I make this a bit clearer for you. So this big fat red line here, this is where market makers are currently sitting. So they're the big boys. They're the ones who control everything. And these little bars here, this is the big institutional investors and the areas of interest they're kind of picking out their strike prices. These are much bigger than as retail investors. These are millions and millions trading here. So we see this big bar here, 75. That lines up with this red line. That is a lot of investors have picked 75 as their strike. So market makers want to keep price below that so they don't have to pay them the premium of that options chain. That makes sense? Hopefully that makes sense. And the same is true on the bottom. Support, they want to keep it above it so they don't have to pay out here. And that is a lot of volume in there, so they're really not going to want to pay that out. So we had that strong wick up here. Not really a surprise. Also on this little indicator here, we can see historically where the market makers have moved to. Yes, occasionally we do break out and they just move the levels. So they move the market so they don't have to keep, it's not just going to stay at 75. It's different every week. It's just based on where the strikes are. So price here, market makers doing a wonderful job of keeping this range bound. People really betting on a breakout. A lot of these probably were betting on the same breakout that I was looking at. So I'm glad I don't use options on PayPal, and for the same to the downside. Although a lot of this strike action probably came from the news that came out in this big red candle here. Let's push it out to January though. We can see the big boys are using the derivatives market to get quite bullish on this one, actually. A lot of people love $100. That's going to be, market makers are really going to want to stay away from that, but strange things have happened. We really do need some fundamental change in PayPal to get people excited. Share buybacks, they're not going to cut it anymore. Investors just bored of that crap. January 2027. I like the new laptop screen though. I can actually read this writing with a bit more contrast. So again, way more bullish. We do have a lot on 60. I don't think that's going to happen unless the negative banking news really affects them. But money's about to start sloshing around this system, and companies like PayPal should be very well positioned to capture some of that. Okay, so talking head here. Crossroads, he did a couple of really good posts. I honestly have been quite lazy with my PayPal research. Again, this comes down to it's really not interesting to me right now. I'm really, really dialed in with the crypto stuff. That's really going to drive my portfolio into year end. PayPal is a steady eddy. I've really not been focusing much on it. I will listen to earnings though. I'm very interested to see what they say, where things are going. But really, he's just put in here. It'll be interesting to see how this ramps in August and September as students hit the campuses. So again, new products coming out, and they're expecting a very large jump in Venmo revenue, more than 2 billion by 2027. So we'll see if that starts to materialize and we can quantify that. What else did you say? Nothing more interesting there. This chart, though, here on the right, I did want to show you. Obviously, we just looked at the options market. We can see the derivatives market is quite ambitious for PayPal. However, this isn't being massively reflected with big institutions buying this in more buy and hold strategies. So like BlackRock and stuff like that. It's up a little bit, but they just want to see something exciting. They want to go behind momentum, and there's no momentum in PayPal right now. As soon as we get some momentum, said that a lot, in a very short space of time, this should pick up. I don't like this chart. This is probably the worst chart for PayPal that I see. And then Crossroads as well put a little bit about the JPM thing. It was JPM. I think I said JPM at the start, but I wasn't sure. I think Morgan Stanley came out and said it's not going to be such a big deal or something along those lines. But really, we're not going to get too much clarification about the impacts of this until earnings. I can almost guarantee if they don't address it, someone's going to ask a question about this. But they can move to alternative sources, I guess. I think JPM may make a mistake in forcing people off using those rails, but what do I know? These big banks, I'm kind of betting against them with my portfolio by it being so heavy in SoFi, which is doing an excellent job lately. It is pumping. Obviously, it can't go up in a straight line, so I am expecting it to cool off a little bit, but I'd love to rotate some of my crypto gains into that when the time is right. However, I do also want to talk about something else, so I'm going to put this chart up for you. We're seeing a lot of people out there say PayPal's dying or all the really dramatic stuff. It's got very nice gross margins. Return on invested capital could be better, if I'm honest, but it is what it is. It's still pretty good. Revenue growth. This is the stickler. People are very fixated on revenue growth, not growing. This is down here. It's, chippy choppy, but it's grinding up. So lately it doesn't look great year over year. Profits growth, though, phenomenal. Love it. But 3-year revenue growth, the CAGR, it's not great. It's single digits. I want to see that up in double digits, and I believe they can do that. And this is why I'm interested in the company, because they have the tools to be able to do that and execute well. Looking down at the charts here, a lot of these ratios are just crazy. But if I put this on yearly, it makes it a lot easier to see. This company has just been banging out growth for a long time. We do have some spotty net income here, a lot of business shifts going on, but this cash flow, that's ridiculous. Operating cash flow, don't know why that was so hard to say. I've just woke up, so maybe that's why. But free cash flow, banger. And look at this shares outstanding. The market has completely shrugged this off. They don't give two figs what PayPal's doing with their free cash. But the cash is still massive. Maybe we'd prefer to see some of this debt cleared. Who knows? Don't know what the market's thinking. Let's check that on the quarterly. Kind of ticking up. So yeah, we'd want to see maybe a bit more of a shift to that, but it's well managed debt. What else was there? Activity. Haven't looked at this page for a while, so bear with me. I'm just reading through it. Obviously, we've seen that in the Fintel chart. Institutional ownership. Short interest, really low. Shares held short, got low. Nothing too exciting. Estimates continue to grind higher. Maybe not the levels we want to see to have some momentum shift, but it's a steady eddy. And we could see some improvements there. But these are trading way below average for the company since 2016. So crazy to me. Look at this revenue per employee. The company I work for can only dream of revenue like this per employee, but we'll see. It's just a steal deal, in my opinion. Take rates come down a little bit, but margins still look good. Operating leverage has been improving. Transaction per account is down, but these are all fixable things if they can get things right. If they can start, this ads business could really improve margins as well. But again, that's taken longer to push out than people would have liked to have seen. We would have liked to see something in this earnings report that's coming at the very latest. So fingers crossed. That's a wrap. If you like this content, give it a share. Share it with your mum, your nan, your dad, your gran, your dog, whoever. And I'll see you next time.